So now let's go into the different kinds of legal structures and different kinds of SEC regulated raise structures that are allowed. And I really like this. I like to keep things interesting with pretty pictures and have some fun with our work because this is very dry and very legal. So I thought of Goldilocks after I made these slides. I was like, wait, this is just like the story of Goldilocks. Like, which one is right for you? So I went through and I evaluated 3 of the most common kinds of equity raise structures that we go through. We talk about these all the time. As we've said before, I pick up the Pacific Coast up until 11:30 at night, and then Kevin is 3 hours ahead, and he picks up at 4 in the morning. I don't know who does work in that 30 hour and a half. Well, there's downtime.
One of our friends in Europe, maybe.
Yeah. So we have these conversations and these texts going all the time about what is legal, what's the right structure to be advising our real estate broker clients. So the most common one that we've seen for many years is called crowdfunding. It's CF, trying to be cool here. It's limited to non-accredited investors or limited non-accredited investors. There's a lockup of 12 months, and we can only raise $5 million in this structure. So that really limits us if we're talking to really large clients. If we want to get our feet wet and just handle kind of the smaller commercial assets, this could be a really great way to do this. But again, some of us want to think bigger. So what does that look like? Reg D is very nuanced, and I'm not going to go into all the nuances of Reg D. I think that if you want to pick up the phone and have a conversation with us and we can understand exactly what you're trying to accomplish, or there's plenty of information on the internet on this, there are 3 different types of Reg D. And so I'm just going to do some broad strokes here. We have limitations on syndicators, and we have to be really careful because we can easily trigger a nuance that takes us into another set of rules. So this is more of a warning slide and just to show what's available. And so depending on where we sit, we can have accredited or non-accredited investors. There are restrictions on the resale and the secondary trades of Reg D shares, depending on which one of the 3 your raise falls into. And then the size of the raise can either be $5 million or it can be unlimited as far as the amount of the raise. Again, it's just you have to follow certain rules within Reg D, and this requires, in my mind, a lot of extra compliance that you have to do to make sure you're not triggering any one of these events that click you into the next set of rules. And finally, this one I think is the most popular, and this is the one that I think that we get the most questions about and the most positive feedback. It's called the Reg A+, and this is kind of a substitution on the private market side. Remember, being able to set the value of your offering and the share price to public offerings, which are known as the S1 public offerings. So this now opens up the ability to syndicate the offering to anyone in public markets, to the general public, regardless of asset size, whether you're just retail or accredited or qualified. There are no minimum investment sizes, and there are no lockups on that trade. So in some of these other offerings, you can only trade the asset after 12 months. In Reg A, as soon as you buy it, you can go and sell it on the open market. And you can raise up to $75 million per year per legal entity. So I think this is really cool because this covers so much of the commercial real estate asset size. It really opens up, the sky is the limit. You as a commercial real estate broker, residential, you can dream really big here. And I think 75 million really works for if you want to put a portfolio together or per building, you would create if it's a large commercial portfolio or a large building, you could say, okay, this is one legal entity to go and raise 75 million for this building. So it really opens up the most amount of possibilities. And that's why I think of Goldilocks, where it's just right because anything is really possible. And also, if you're going to go through all of this work, all of these have to be done through a broker-dealer. If you're going to do it, why not go big? Why not dream big? As they say in Braveheart, we didn't get dressed up for nothing. So it has the most possibility.
Absolutely. Well, there's a reason that Reg A or A plus is the popular one. And for residential brokers, I think I want to give the same example I gave to a broker that has about 1,000 agents in Florida, because he was asking me questions about, well, why would I want to do this? And then when I gave him the 3 examples, he said, I get it. So If you go out now, there's a couple of offerings out there where they're using this Reg A program, and one is single family homes. So as you described earlier, there's people that want to buy a fractional interest in residential homes, and so they have announced a Reg A plus offering. It's 75 million, and their web portal for the person that's doing this has house after house in there that you can buy a fractional interest in, and they can raise up to 75 million. Another example I gave them was a company that's focused on acquiring properties. They're going to be put into a portfolio of Airbnbs. Again, people can buy a fractional interest in the portfolio of Airbnbs. So you see this repetitive pattern. And then the third one was somebody who was going to do serial issuances of residential properties. So for a residential broker, it's easy for them to think about, okay, you're getting lots of commissions. If somebody's assembling $75 million worth of Airbnbs or houses, that's a lot of transactional volume for many, many brokers. So I don't want people listening to this to get off track thinking, well, I don't do commercial. I don't have any $75 million buildings that I need to raise money for. You're going to have your agents come to you. Don't you agree, Teresa, that people are going to come to you and say, I've got these people that want to start raising money to go buy portfolios of homes. The last example, which would be a fourth one, is I've seen people now raising using Reg A to buy and fix and flip, right? We all know in our local markets people that like to fix and flip, and they usually go to private money or other sources, or they have pools of money that they've already raised. This allows people to really scale this up, and we're already seeing it. People that are doing $75 million raises to go do high volumes of fix and flip properties, aren't we?
Absolutely. Yes to all of your points. And I think that we have these connections in our communities as real estate brokers and practitioners, and these opportunities are going to come to us. And I think the biggest takeaway here is just to know that there are options and there are people to help you in structuring this, because it can be very daunting. Like, where do I get started? We don't want to say no to this business, and there is so much that's coming our way. I just think of the mortgage opportunities and the changes in financing, where we are now even starting to offer swing notes. It's really mezzanine financing, isn't it? Well, that's what we call it in commercial. And we're starting to bring that over into the residential space. And I think that you follow the money. I always say that. And if we're already seeing that on the lending side, let's think now to ownership of these assets. And now how do we broaden our base and really bulletproof our businesses to make income in many different ways?
And I think before we get into some of the specific execution requirements, for the residential brokers especially, you had mentioned, and maybe we can kind of tie this down a little bit, the qualified investors, accredited, and then non-accredited, because there are probably a lot of residential brokers that are listening to that saying maybe they've never invested in a program before. I think we may want to take a minute and tie some of that down. The qualified investor piece is sort of the easy one. You give examples of endowment funds at universities, big institutions, and then there's a requirement for an accredited investor, isn't there?
Absolutely. So the accredited investor has to have a minimum net worth. They have to have a minimum annual income. And those numbers vary if they're single or if they're married. And it has to be liquid. It cannot include their primary residence. And then when we're thinking about retail investors, it's anyone who doesn't meet that threshold of accredited investor. All of those people sit below that. And that's why I love the Reg A plus, is that we don't run afoul of those rules, because it's very hard to prove that somebody does or doesn't meet that requirement. I always go to liability and say, client suitability. It's huge for me. So what if somebody doesn't tell me the truth, that they're not an accredited investor? So they're really, let's call it retail investor, but they've maybe lied or funged their application just to gain access to my program, to my offering. I don't want to later get in trouble because they've invested in a real estate asset that's not tremendously liquid, or until the asset is then sold, whether it's a 3, 5, 7, 10, 20 year time horizon for that investment. So for me, that's where I think about broker liability and client suitability.
Well, the thing I want brokers to take away from this too, and you know this from the world, from the investment banking or broker-dealer side, if you go where the money is not the accredited investors. Yeah, they can invest, and some of them have a lot of money, but as a percentage of the audience, I've heard numbers between 7 and 10% of people who want to invest in projects are accredited investors. So you're talking 90 to 93% of the population would rather be in a Reg A offering, or could be a Reg A offering, versus an accredited offering. So for real estate brokers that are watching this is where the money is. If you want to go where it's most suitable for clientele who want to invest in projects, whether again it's a portfolio of Airbnbs or fix and flips or whatever it is, this is why people are gravitating into this. Not only does it have different requirements, but it is where you have the maximum audience of people that can actually invest.
Absolutely. And I think it dovetails really well into the culture. I'm big into the culture of the blockchain community and just understanding it. Maybe I don't have to fully subscribe to it, but I at least need to understand this demographic that's up and coming and actually very active in investing. So these people who are blockchain friendly, who are already invested in crypto, they expect the fractional ownership. They expect a blockchain experience going into investing. And I think that we really saw that in the last 12 months with the meme investing and the Robinhood. We saw that people want to democratize really this investment experience and how they create their own portfolios of assets. And that's what this digital fractional ownership piece really provides, is now we can take these, what used to be these huge monolithic, you only had access if you were a family office worth like $1 billion into, and be able to access real estate. But now the average consumer can just say, I want to own part of that property. That's really cool. I want to say at the dinner party, I own part of that beachfront property. I own a piece of that luxury apartment building or that tower downtown. And I think it's all about the story and the empowerment that we give to our customers.
Yeah, absolutely. Absolutely. So let's dive into some of the operational implementation issues.
So as I wrote this out and I thought about all the work that needs to go into underwriting, and I come from this world, right? I was like, wow, it's really like rolling a boulder uphill. But have no fear, we have outlined this for you. So the annual output that we have, the expectation of the funds and the investments that we're creating is we have to have audited financials. We have to do the K1s as a result. So that's for taxes. And then we have to come up with a net asset value share pricing. And that's based on what the asset is worth today and the revenue that's gone into it. We also have dividend distribution. So the money that goes out to our investors every year. And we have to document and say, these were the costs, and this is the net income, and this is what we're dispersing to you. And we also have to be very cognizant of addressing the liquidity concerns and the exit strategies for these assets. And I kind of just touched on that. We have to give the accurate expectation going into structuring these deals. How soon do I get my money back? My friend Brian is a customer of mine in the Bay Area, and his team are the second largest home flippers in the San Francisco Bay Area. And I actually helped him write his deck. I do that for friends once in a while. And I went through and I did all the calculations of his holding periods from the time of acquisition to dispersing of the asset. So it's about 10 months on average, sometimes shorter, sometimes 7 months. So I know that lockup of my money is less than a year. Now take into consideration a commercial real estate asset. Maybe it's a family legacy asset that they have no intention of selling, but you're just buying and clipping a coupon every single year on that revenue. Well, we know that we're not actually going to ever sell that asset, probably in our time horizon for the customer, but we have to fully disclose that and say, okay, this is how you can then sell or transfer your asset to somebody else who would like to be an investor. So that's really important that we say these things up front, and that every year we go back to that. As in the investment world, it's called an investment policy statement. And that's what the big pension funds, that's what the institutions all follow. Every one of those has an investment policy statement. And I think as we structure this for ourselves, for our clients and the sponsors, we say, okay, what is your investment policy statement? And so to do all this, to accomplish this, it's a team. So as my friend says, the one who likes pie, he always says, teamwork makes the dream work. And I know that's super cheesy, but it's true. So we have this whole team put together. We have underwriters, legal counsel, we have investor relations. I think this is key. One of my closest friends she's a chief marketing officer for the investment bank. And it's brilliant, the amount of material that we have to put together. It has to look sharp, it has to be sharp, it has to speak to the facts about what the sponsor is offering and the actual investment product itself. We have auditors and ongoing financial reporting duties. We work with some of the best accountants that also work for family offices, and we make this available to the people we consult. I think it's all about sharing that wealth of information. And then depending on whether you're doing this in-house or your client has these people already on their team, there needs to be a vice president of finance, a controller, a CFO, and of course a CEO. If it's an LLC, there really should be a general partner maybe that's the real estate broker, or maybe that's the sponsor, depending on how involved these parties want to be, how involved our clients want to be. If you're going to be the general partner for some of these funds, maybe this is a way to earn extra revenue for you and your firm. So it's just a matter of your comfort level with the client and then with the process.
So Teresa, if somebody's watching this, it doesn't matter if it's a residential or commercial, like the commercial guys, as we've been talking about, may be much more familiar with the players because of their experience with syndication and capital markets. Yeah, my takeaway on this, and I'll let you add to this, is find the right broker-dealer. It needs to be somebody that is engaged and believes in digital securities and blockchain. It needs to be somebody that can either like you described in Securitize, have an ATS and transfer agents for liquidity purposes and actually the glue that holds everything together. So my takeaway here is you need to not take off and just assume you have the right people, but spend the time to make sure you are set up correctly, because a lot of what you just described intersects with those parties. They're going to help you with that. You've got to have the right people on your team, but it's way easier if you have the right broker-dealer, and especially if that broker-dealer, you can make the right introductions to an ATS and transfer agent, so you have liquidity and you have the other pieces of it, versus just trying to decide you're doing this and not have the right people supporting you.
It's so critical. And I'll say this, I've been licensed, and it scares me to say this, like almost 20 years on Wall Street. Like I've gone, I've always had one foot in that pond, I would say, and then also into organized real estate as well. And for me, even, I'm learning this, right? Even making these slides and doing more research, I was like, oh, even more nuance. So I think it's really important to have the team of advisors that are right there with you, that are holding your hand and saying, okay, this is what we want to accomplish. Let's make sure that we have all the right players who are SEC licensed and that we're making the structure correctly. It's just so critical. And also on the other side, I just know that these kind of people and resources exist who have been kind of studying this from an academic point of view to be able to then help our business partners in the real estate space.
Right, Teresa, if a broker is watching this, one of the things that I want to say I'm concerned about, but I think I find in talking to a lot of broker leadership that they don't really understand is, we've talked about different models, we've talked about Regulation A, and for most brokers, they've got a roster of agents that are out there doing transactions, and they're going to potentially run across people that are going to say, I want to do a bigger volume of fix and flips. I want to get a bunch of Airbnbs. I want to do these transactions. And they may get into a little bit of what I would describe as a pickle. So they're watching this and they're thinking, well, maybe I don't want to implement all this, right? I'm happy with what our business is. I'm happy about our marketing, our message, our brand. We're going to continue doing what we're doing. I'm not going to mess with this. Unbeknownst to them, this is the pickle. Their agents may have run across one of these entities that's going to help them do this, or clients that want to do it. Now all the parties are together. Their brokerage operation is seeing transactions, right? Airbnbs are being, or residential properties are being acquired, Airbnbs are being acquired. And what that broker leadership doesn't realize is they're creating securities, right? Mm-hmm. Digital securities are being created and they're not compliant. So what I see is there are two options are, they either have to update their policies and procedures and specifically say, you can't do the following things that create digital securities, or they have to actually implement. I mean, what is your thought on this?
Yeah, so as a managing real estate broker, this compliance is a huge part of what I do. I affectionately say that the marketing part of my brain died in my 20s. And when I picked up and became a broker, that's all I think about. I think liability and risk and doing what's right for the client. And in this case, we are increasingly seeing agents being out there in the market promoting, selling real estate as NFTs, promoting these alternative ways of owning, buying, and disposing of real estate. And we know because of the SEC rules that this is touching on the digital security space. And if the agents in your firm don't understand these rules and they get in trouble, and when the SEC starts cracking down on this, because this is one of the most clear use cases of NFTs then violating the Howey test, guess where the auditors and the regulators come knocking? As we know, based on the clauses of our contract, the agent is never liable at the end of the day. Guess who is? The real estate broker.
Yes.
Lovely that we've signed up for this responsibility. And we need to address it as the landscape of real estate is rapidly changing. What's fascinating to me is when I came over from Wall Street into real estate, funny story, this was all a hobby to me. I was just trying to keep some life skills as I had 2 little kids, one on each hip. And I was like, I'm going to start the first online real estate brokerage in San Francisco. I can be around for my kids. And it's since grown into this other thing, right? And why we're here today. So I would also say when I came at it and I looked at organized real estate from the lens of Wall Street, it was amazing to me that real estate could be bought and sold the way that it is without the transparency that Wall Street has been mandated to provide to the consumer. And we are starting to see that. I never would have guessed that blockchain was that thread, was the needle that pulled the thread through on that one, but it's here. And it's here faster than we ever envisioned. Thank you, COVID, for giving all of the time right in front of our phones and our laptops so that we can read about it. The consumer expects this experience. And we know as brokers, we watch our agents, they will go where the money is. And so we as brokers must protect that consumer and offer what is legal and what we have the authority to then give to the customer. So we have to be in front of this. We don't have a choice. The toothpaste is out of the tube, and we just have to get in front of it now by making sure that we have the rules and the policies and procedures in-house. Like you said, either adopt this as a line of business or flat out tell our agents and say, you're not offering this. End of story, right? Because we do not want the liability and the risk for this.
Perfect.
Awesome.